Hello traders and welcome to another video review. Today is Friday, June 23rd, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, we have important data scheduled for release. First one is the German manufacturing PMI data. This one is scheduled for release at 9:30, and the market forecast for this particular release is a little bit better than the previous reading, 43.5 versus 43.2. So we will see how it's going to be at 9:30. 1 hour later, we got the manufacturing PMI from the UK. This one is the forecast for the manufacturing PMI is lower than the previous reading of 47.1, as the forecast is 46.8. Quarter to 6 p.m. On this time, there is a services PMI release scheduled from the US, and the services PMI is forecasted to decline from 54.9 points to 54 points. So three very important data releases, market movers, maybe trigger of the increased volatility. So please stay focused and vigilant during this data release. Now let's jump to the charts, and we are going to start the technical section with euro dollar. For our chart of the euro dollar is showing us a little bit of the pullback after some kind of an impressive rally to the upside from the last swing low. The bulls managed to rally over 3.5%, so quite nice. If we zoom out, we can see there is still some room to the upside, so we can rally even up to, let's say, almost 4%. Yes, 4.32%. This is the ultimate target for the bulls during this movement to the upside. Let's just zoom in to see what is going on the intraday time frame. This is 4-hour time frame. Let's see what do we have here. It looks like the market of the euro dollar is trying to reach the extreme levels, because on one hand it went to the extremely overbought conditions, right, just above the level of 70 on the RSI. So this corresponds to the top at the level of 1.1012, and since then we got bearish engulfing pattern, then confirmation, and then two very small inside bars of the inside bars, like a kind of a doji, as the automatic software is telling us, and then extension to the downside. The next candle, the present candle, is again red, so it looks like we might be moving lower towards the 1.0908. Where is the next situation here? Where's the next technical support here? What's the next situation for this market? I guess that the of this level, this technical support just above the 100 periods moving average at 1.0860 is the ultimate target for this movement to the downside on the euro dollar. And this means that after we break below the level of 50, we are actually at the level of 47, so 3 points below the level of 50. There is still a room for the market to go a little bit lower. So what's the biggest correction during the last up move? Let's just take a look here at the correction. Maybe there is some kind of a overbalance, but I don't actually think so. We got what we got. We got like 1%. Okay, that's fine. We got this one looks quite big. We got like 0.71. So 1% is the biggest correction, because all of this looks smaller. So if we go down more than 1%, then of course we will have the overbalance. So right now we are down 76 minus 0.76%. So there is still a room to the downside. There is still room for the bears to press to push the markets lower, and it doesn't actually create any kind of overbalance. So outlook is bearish. We should see bearish movement on the euro dollar soon. Due to the data releases from the UK, let's switch to the market of the British pound. So what do we have here is very clear. We got the breakout above this technical resistance. Now it will be technical support, and as you can see, the local high after the breakout was made here. So that's the range high and the breakout high. So we are of course testing this zone. Very obvious basics of the technical analysis, of course. So what do we do right now? Well, the other thing is that we just tested, apparently almost tested, the extreme of the up move located at the level of 1.2723. all right, so I'm talking 1.28, so 1.2847. I'm talking about this level. That was the situation where the opportunity for a breakout was created, but the bulls failed. Big pin bar was created instead of a breakout. Now we have a turning, we have the reversal on the 50 periods moving average, right? But the market, as you can see, is rather still closed inside of this kind of a tight range. 1.2695, 1.2690 was the local low, right? But the bearish pressure might cause movement lower. What's the very important zone? This zone, the zone between two green lines, the horizontal zone. So any breakout means test of the 100 periods moving average at 1.2638 will happen. There is still a room on the momentum. Momentum went down to 41 points, so the momentum is weak and negative, but there is still a room for the momentum to go lower towards the extremely oversold market conditions. So there is still a room to go to the downside on the British pound as well. So please keep an eye on the British pound, keep an eye on the data release and how market will play out the data release itself. So that's the British pound, that's the euro dollar. Let's just find out what the Bitcoin is doing, because it looks like a very interesting price development. So we are following the 4-hour chart of the Bitcoin since Monday, and we can clearly see that this swing to the upside is 24% high. All right, so that's a very nice rally, and this rally broken above very important technical resistance. So let me just show you this technical resistance. It was tested at least 3 times around here. So $30,000 is the level. Basically $30,000 is the level that was tested so many times. Right now we have a kind of a breakout above, but then of course the pullback occurred and the market went lower in order to consolidate the recent gains. Okay, what is the next target for bulls? The next target is 30, let's say 31,000. I guess I need to catch the correct candle. 31,044 is the next target for bulls. So let me just zoom in for you guys to see, because we got all of the levels on the chart. Now this is the swing high with a spike to the upside, some bearish pressure because we are already in the bearish zone. So right now we should change this line to red because it's a technical resistance. Now the level of 30,000 psychological level will be considered as a support, and local low at 29,556 will be located will be considered as a local intraday technical support, of course, right? So we have a bullish pressure, short-term bullish pressure from the downside. We can see it right now. The market apparently consolidates around the level of 29,800. Nevertheless, what we are waiting for is a breakout to the upside. So what should we expect here? We should expect a breakout above this line. I always painted like kind of orangish. And this is what we should expect soon. Breakout above this short-term trend line, very short-term trend line, will likely cause rally towards the swing high located at $31,044. So please keep an eye on this level. Keep an eye on the basically on the developings right now in this tight consolidation, because the market is consolidating the gains, occasionally might spike lower, but the bullish pressure is still high because market is trading inside the extremely overbought zone. It doesn't want to come off that easy. 89 points was the high on the RSI, so that's a very, very strong momentum. We can come off towards the level of even 80 or 70. Nevertheless, that's still a very strong momentum. Bulls are in control of this market. So after the consolidation and maybe a possible pullback is terminated, trend line supposed to be violated, and the uptrend supposed to be continued towards the last swing high at $31,044. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.